Well, hello and welcome to today's webinar. We are definitely thrilled you've joined us today to learn more about our new StartSmart, which will help you reach more millennials and discover a new winning sales strategy. My name is Jeff McClendon and I'm a senior sales manager here at Assurity. Joining me today is Vice President of Marketing and Digital Experience, Scott Zagurski. Scott, I'm going to hand it over to you at this time to kick it off.
Well, good morning, everybody. Thanks for all of your attendance today as we go through our new sales strategy plan to help you target and market to more millennials with need. And to get into things kind of about our concept and our product, a couple points to kind of fight into here early on. In the last 2 years, how did sales get affected for life insurance due to COVID? Well, I can tell you, if you don't know, life insurance has been great as far as sales the last couple of years. We've seen more demand because of life event triggers that were new in the market prior to those last 2 years. Life insurance prior to those 2 years have been pretty flat, right? When we look at things, I always equate them to milk, right? Is it 1%, 2% milk? That's kind of the growth of life insurance has been in the previous years prior to COVID. And you've seen that in our industry. You've seen changes in our industry with different carriers starting to abandon the life insurance market. But the need has always been there. And COVID really did stir those life event triggers in people's minds, whether you were old or young. How much life insurance did you need, or did you have any at all, became to the forefront of people's minds during that time frame. And then we look at kind of millennials, right? So if you're in marketing, millennials is one of those buzzword bingo terms that ultimately people have been, cramming down the marketing path here for about the last decade. But what we're seeing is now huge buying potential. People typically don't get into purchasing insurance until those first life event triggers, right? When you're starting a family, you're buying a house. And for millennials, it's taken them a while to get to that point of their lives. But for millennials, they found themselves, in this COVID period that they didn't have the life insurance they needed, or what was provided through work just wasn't there. Or more and more millennials in this market just don't have traditional benefits like a lot of people my age, I'm old, had growing up and as part of kind of an employer plan. They were working kind of their freelance jobs or in the gig economy, as it's called, and they don't necessarily have a benefits package. So, like everything else over the last 2 years, they felt empowered to do something. And ultimately, they sought a lot of solutions out, and sometimes those solutions weren't the best solutions for them. They were just the most convenient solution. So for this demographic, debts and expenses are at your all-time high right when you kind of start those life event triggers, right? You get out of school. You may or might not have gone unscathed with student loan debt, just kind of out of the gate. And when you're looking at kind of starting that family, typically in your life is when you're making the least and your debt is the highest when you first get that mortgage. We'll go through that a bit more later on. So as these people, we're painting the picture in this scenario of we have this huge group of consumers that are interested in life insurance, that as you all know who are out there selling this product is sold, not bought. And when it is bought on its own, sometimes the best results just aren't there. So what we're looking at is packaging solutions for this group and what we call our StartSmart life insurance program. And it can show how affordable a 3-in-1 bundle plan can be to help fill the gaps that these consumers have. So again, going back to kind of the impact of COVID, we saw that sales were up, as I mentioned earlier, and millennials realized that, hey, anything can happen to you at any stage of life. The younger you are, typically the more fearless you are. Nothing's ever going to happen to me. That's always going to happen to somebody else. But, real life event triggers made these people realize that they needed protection for themselves and their family. So what happened? As most millennials, they went online. They found the most convenient solution. And there's nothing wrong with convenience and expediting, getting a policy into somebody's hands. But for those of you who sell this particular product or sell life insurance in general, that sometimes the quickest product isn't the most affordable product. It also doesn't cover the basics of what somebody really needs to cover themselves and their family. And that's where the value of an agent is always going to be there. And we at Assurity believe in that. We believe in the value of that independent consulting. And what you're seeing from this group now, if you've read any of the trades or if you've talked to different carriers, is these millennials who took out kind of these quick fix term life insurance policies to make sure they were covered, these policies are now lapsing at a huge rate, much higher than the industry average, because they're realizing there's something better out there, but they just may not know what that thing is. And so when we look at those impacts of COVID, that buying trigger now to buyer's remorse has been real. So why millennials? Again, we talked buzzword bingo earlier. Still over half of them don't have any life insurance. And we talked about some of the reasons why earlier. That is a huge group of people out there that have these needs that are available to you as prospects every day. And we believe that offering just a little bit more than vanilla term, where people are looking for more value for their dollar, especially right now, is more important than ever. 78% of these people prefer to have all their insurance policies with one carrier. And let's face it, that really has to deal with you out there pointing them towards solutions that they can trust, and they don't want a bunch of different bills. It's depressing enough to pay one bill for insurance when you're trying to make ends meet. So bundling solutions with one bill that's convenient and easy to pay and remember is ultimately part of the convenience that we miss on the front end, right? After that policy is issued, retention happens much more frequently, and it's much stickier if people feel that they're truly getting value for their dollar. And these young people are out there searching for those affordable solutions. So I talked through this gap, and here we show a chart kind of helping to explain that gap. So the red line above is kind of where their debt can be, and these are averages for people. So that student loan debt is real. There's been a lot about that in the news lately. But the student loan debt on average across the country right now is $28,950. I can tell you for some personal experience in my life, it can be 10 times that depending on what type of school you went to and kind of what your situation was getting out of school. So you're kind of burdened with that right off the bat, and that could be burden for you or burden for your spouse or partner as you're starting that family out. Then an interesting thing that hasn't really changed over time is when you kind of get that first mortgage payment. For the last 30 years, it's been like clockwork that the average age of your first home buyer is 29 years old. And now there aren't as many 29-year-olds out in the market right now. We've heard stories in the news about how some of them have to move back in with their parents because of the first debt piece there. But this mortgage payment for those who started that last year before these interest rates really ballooned up and this market kind of turns the other way, they almost felt like they won a lottery ticket for getting the bid on their house, right? They were up against multiple people paying sometimes above what the market, actually was for a house in order to get that first house. So it's a real emotional tie to this first house for people. And with interest rates in the housing market being what it is, they don't want to lose that position for them or their family. So that is a real event trigger that has been stronger here lately than it has been in the past. And then let's say you finally, kind of check out those boxes. You think of the board game, the game of life, right? When you're driving around in the car and you're spinning the wheel and you go through and, okay, you get a house, you get married, then maybe you have that first child. Well, that first child definitely comes with other expenses, right? The health care for that first child, which isn't even, shown in this chart, the burden of that health care and the payments for that child have increased over the last decade by shifting some of those costs onto the consumer themselves versus the employer if they have that type of benefit at their job. And then just the cost for that child, daycare and other costs associated with that, kind of start really building that gap up. So if you find these customers in their late 20s, early 30s, you're going to find a lot of people in this situation. And then the blue line for income, for most people, they're typically making less the younger they are. For most people, their earning sweet spot in their life is when they're in their upper 40s to early 50s. That's when you're typically making the most income. And where you have some of these other, debts more under control because you've paid towards them for several years. Or when you're right out of the gate, whether it's, your home, some of these other bills, or an illness that could come up, right? You're at the biggest gap where you need help that you ultimately may not be able to afford if something really tragic does strike upon you or your family. So that's where at Assurity, we've bundled our term life product to come up with what we call a StartSmart program. This offers, what you would call as traditional term life, along with two value-added riders that we feel are essential right now for this type of person. Critical illness, we talked about rising healthcare. High deductible healthcare plans are the norm, right? Now, in most states, over 65% of people are on high deductible healthcare plans. That deductible for a family of four this year is going to be over $14,000. And most people, quite honestly, don't have that in their bank account because of this other debt. So we feel that is essential for those big, huge ticket items that can hurt a young family early on if something comes up, that for pennies on the dollar, giving them coverage that help bridge that gap really matters. And then the one thing that we at Assurity have been huge believers since we wrote our first policy here is on disability income protection. For most of these people, and that income, to debt ratio that we saw on the previous chart, they need that income, right? If something would, interrupt that income because of an accident or injury, how are they ever going to catch up or make up ground on that debt? So we combine these three coverages to provide coverage in one bill, one product that gives millennials what they need. And what we're looking at for these young families for most of the pricing coming up that Jeff will go over with you later, it's less a month than the cost of a fast food meal for that family. So why wouldn't you take a look at those things to put people on the best start possible in order for them to feel empowered and move them along with something that is affordable and ultimately very meaningful for them. Then I'm going to hand it back over to Jeff to kind of go over the details of what we're talking about here.
Excellent. Well, thank you, Scott. And so the StartSmart solution, as Scott mentioned, is a combination of term insurance. That term insurance could provide a benefit to the beneficiary in the event of premature death, of course, with that valuable critical illness protection. And then the third piece is, Scott mentioned, disability income. So the beautiful thing about this, it is fully customizable. Assurity offers term life insurance from durations from 10, 15, 20, and 30 years. So your client would be able to customize the duration of their solution. Adding in that critical illness rider. I'm a big fan of critical illness, and Assurity's got plenty of triggers that are going to cover the majority of the major medical things that send us to the emergency room, send us to the doctor, send us to the hospital. And to be able to choose a benefit from $20,000 all the way up to $100,000. And again, all bundled within one policy. And the last piece of that is that disability income rider. You can choose a benefit up to $3,000 a month. This is one product, it's one premium, one application, and I think you're going to like what we have to share with you here in just a minute. So what is so smart about StartSmart? We absolutely are focused on that millennial demographic, right? The largest, most active insurance buying generation out there. That generation that substantially needs our assistance as advisors to instruct them, to guide them, and to make sure that we're providing a solution to them that can cover them and their families. It offers that protection, again, when they are in the scenario where their income is low and they're taking on a lot of debt. Myself has got a 26-year-old son that fits right into this demographic. And it offers real living benefits that matter. So I want to make a point here. The term insurance with critical illness rider and a disability income rider, that critical illness and disability is not eroding the death benefit of that term policy. That is very, very important to me as a consumer of this product as well. If I become ill and I have to file a claim under critical illness, I don't want that to erode my death benefit on my term policy. I want to keep that in force. God forbid something happens. In the same way with a disability income. So these are true living benefits that do not erode the death benefit. As I mentioned, one application, one premium, 3 coverages all in one. One check or one bank draft a month is all that's going to be required. And the streamlined quote to application tool is exceptional. I love the functionality of it. The feedback that we're getting from the field has been very, very positive. So the advantages of this product is we're protecting the life of the insured, we're protecting the health with valuable critical illness coverage, and we're also protecting their income with that disability income. Designed for millennials, those that like to do research online, like things quick and easy and simple. This is a potential non-medical scenario in a very, very quick turnaround. Again, we can go from quote to application with the ability to get an instant decision on upwards of 50% of the applications. Monthly price, again, very, very affordable and less than the cost of a family of 4 eating out. We know how expensive that can be. So this is a very affordable solution for your clients. And it includes options for multiple coverage types and amounts. So again, you can change the duration or select the duration, select the amount of the disability coverage and the critical illness as well. So who is this a good fit for? Thinking about the housing market right now with housing prices so high, rent is going up as well. These millennials are taking on a pretty substantial amount of debt, and they need us to help them and protect that. We need them they need that protection, if you will, to cover that mortgage, not only in the event of premature death, but in the event of sickness, accident, and disability. Freelancers, I've seen this personally coming out of the pandemic, more and more interactions with freelancers, folks that have multiple sources of income. They are not working a traditional 8 to 5 where they've got a health plan, they've got full benefits. They're doing 3, 4, 5 different things, earning a great income, but they don't have access to all the insurance that you would typically do through a full-time employer. And as Scott had mentioned, student debt, the cost of going to college continues to go up. We know it will continue to go up. And having some security of, gosh, if something were to happen, I've got some protection here, something that's going to prevent me financially from just going completely bankrupt. So we're going to take a look at a sales idea here. Rachel, beautiful, smiling young lady, is a recent college grad that just turned 26. Like many folks this age, she's renting her first apartment, and asterisk by this, she's paying her bills solo. I look forward to this day. She's paying her bills solo by herself. Unfortunately, she does not qualify for health insurance or any insurance coverage under her parents because of her age and obviously not living in the household. She is making regular student loan repayments. So a beautiful solution for her. $250,000 of term insurance for a duration of 20 years. So a 20-year term for $200,000 to cover that premature death exposure. The critical illness, a $20,000 lump sum benefit critical illness rider we would add to this. And to finish it up, that disability income. She had opted for the $1,500 a month benefit on that disability, all for less than $40 a month, little over $37 a month for term insurance with critical illness and disability. That is a powerful, powerful story right there. If we were to take a look at another one. Andy's a graphic designer, a little older. He just turned 30. He's married, got a beautiful wife there, and they are expecting their first child. He's got a small insurance policy through his employer. And as we know, for the most part, that insurance coverage is not portable. He basically wants to make sure that his mortgage is covered in the event of illness, in the event of accident. He wants to make sure that his family is going to be financially taken care of if something were to happen to him. The solution? A $250,000 30-year term policy fit the need for him. That same $20,000 critical illness benefit. And again, that is a lump sum payment of $20,000 in the event that there is a covered condition that he experiences. And then that disability income rider, which he has opted for the $1,500 a month benefit, and this entire package for less than $50 a month, $48.27 a month. So very, very reasonably priced, very affordable coverage, and very robust protection for our millennials out there.
So as Jeff presented, and thanks for presenting that, Jeff, because what you're seeing is starting to paint a picture, and just like we looked at Andy on the previous slide, right? Looking at covering even the duration of a mortgage or the amount of the mortgage in two different ways, right? It could be the total mortgage, if that's kind of the $250,000 for the term to make sure that he and his wife are in a good place, or that $1,500 a month, from a disability plan will keep him in that house if something else happens in the meantime. So you're seeing those things that kind of tie together and make sense on this plan. And again, for one bill, one easy low monthly rate. So the process, again, on this particular product, when we look at our term product, we do have an easy process. We do have non-medical for anything under $500,000, on that particular term price. And that's what millennials want. They do want the convenient process, but they want a little more for their dollar. They want a little bit more from you and recommending those things to them. And let's face it, once you start a relationship early on with a client like this, most of you will keep those clients for life because they've had a positive experience early on. So that's another real reason to go after this particular market. And going back to our chart, we're just offsetting the risk of kind of these folks while they need it most. And so not only are we going to give you this concept, this product, but at Assurity, we're going to give you the tools that would actually help you sell this. We have consumer brochures that are, that go directly to these millennials that you can have as a leave behind or a thought process. We have some of the sales ideas that we went over today, as well as others that we'll produce in the future to make sure that as you're looking at your prospect list, I know one of the things we looked at was, a situation that I'm in, the person that co-signs the loan for the debt. Right now I have a daughter that's a sophomore in college. She's going to have student loan debt, and it'll never be easier than in her life or cheaper in order for me to secure, that loan for her if something, God forbid, would happen, than to take out insurance when she's younger in her life. So I'm not stuck with that as well. So those are things that you just have to think through, and we're going to provide you the sales ideas and then the consumer videos that would help you explain that to somebody as you're packaging this. Because let's face it, brochures are great, but ultimately in today's day and age, something that can be consumed in bite-sized pieces, and not quite TikTok ready on our video, but ultimately a video format is a great way to get the word across to folks, and we'll provide those tools to you. So we, kind of tie this back up, we talked about kind of COVID and where it really kind of energized this need in people's minds, right? To make sure, if we learned anything from the last couple of years, that life is uncertain. Sometimes life feels a bit out of control for all of us, and people just want a way to feel empowered and to take that control. Millennials are out there shopping, whether they just had a lapse policy or they're looking for their first policy in that 51%. They're looking for this coverage now, and they want something that is, as we've all learned over the past decade or so, that living benefits really do matter. The first objection you're going to come over with this group is, well, God, that'll never happen to me. Well, that's why you want to have a richer product, a deeper product, so if there are other things that happen to this person in their lives, they don't have to worry about it. They have the coverage they need. And unlike some of the term products they bought online that would never convert to another product, our product can convert in the future if they need to follow that life insurance product further in their lives past this initial term that they first signed up for. So it's a really great story and a really easy way to sell somebody their first insurance product. So if you want to try this out for yourself, run some quotes. We do have an online e-application platform. Just go to assurity.com/StartSmart, run the quote. It's going to show you what that looks like with a critical illness rider, a disability insurance rider, and allow you to customize that in ways that you can start running those scenarios for your clients in order to present that in the best light and hopefully get more people that truly need this coverage because I know that's what we're all in business to do. So that is what we had to present today. We are finding that we've got quite a few questions, so we'll kind of go through those, as they came in. And so we have several around kind of, our disability rider and kind of how that works. Is it accident and sickness? Which the answer to that question would be yes. It would cover either accident or sickness, on this particular product. Now, like anything else for our products, it wouldn't involve a pre-existing condition, right, that you would have had prior to coverage. But ultimately, it would cover you, after the fact on the policy. So it does cover both accident and sickness. Our underwriting requirements, with our term policy, we do have some underwriting questions on our application kind of revolve around disability insurance. Typically for our products, you have to be a U.S. citizen or resident to have a policy. We are looking for someone who's working some sort of position for at least 30 hours a week. And then there are some types of jobs that we don't cover, but they're few and far between. Assurity is known not necessarily as the highest white collar carrier on DI, but we definitely, what I'd like to say is we don't serve the doctors and the lawyers, but we serve their waiting room, their nurses, their paralegals, the people that they're helping out. So we're definitely a blue-gray collar is our expertise on DI, but a lot of coverage there that we can do. Another question we have here is StartSmart available in states? Well, we do have a few states that some of these riders are not available in. And we do have a highlight sheet that we've created that we can send out to anybody who's on this webinar today. So you'll know exactly, where the handful of those states where we don't have coverage yet, but hope to get that, bundled in the future for you. So you can take a look at that, and we'll send that out to the group.
Scott, I see one here, a question. You mentioned it on convertibility. And yes, this coverage is absolutely convertible. It's a traditional term policy that has your typical conversion options. And another comment that came in are tools available to sell, and absolutely so. That website that we showed, I always recommend that you start there. We do have a lot of good content available through that site, as well as a SureLink to help support your needs there. What else do we have? Oh, I see one coming in on proof of income. Hey, do we need proof of income, specifically, obviously, for the disability income rider? So we are non-medical, have a non-medical offering on our term up to $500,000. And on the disability, Assurity is very, very good in the DI space. We can actually do non-medical up to $5,000, no financial up to $4,000. So to address your question, we're not going to need proof of income out of the gate. Rare that it would happen, but if we ever did need to, we would reach out to the client for that. But again, very, very rare. How tough is underwriting on disability income? I mean, Scott said it. Assurity's been doing disability income for a long, long time. Our underwriting team does a fabulous job. Yes, there are definitely some occupations that we're not real fond of, but for the most part, yeah, we do a really, really nice job at underwriting. Is the Smart Start video available to share? Scott, do we have that YouTube video?
Absolutely, and along with the highlight sheet that we can send out to you. If you haven't seen that, we'll make sure that that's available to anybody who is listening today. And just on our website in general, Assurity has been building up our tools, especially for this market. We have social media kits as well for our term life products that we're looking to expand ultimately, to reach these people in, different ways. So we'll have those tools and we'll link to those in an email to follow up on them.
Scott, there's one that I saw that came in on prospecting ideas. And, keeping in mind that we're talking about the millennial generation here, right? Social media is a must. I firmly believe that you have to be on social media in order to reach the largest demographic here in that millennial demographic. So big fan of social media as a prospecting tool.
There's another easy prospecting tool that happens around the summer a lot. For those of you who've had high school reunions, at your local high school, you'll also see people who have, you might be like me, I'm at the 25, 30-year stage, but you'll also see those same things go out to people 5 and 10 years in their high school reunions. And as an independent agent, just starting there with the group in your own high school, when you see those people reaching that age, it's an easy way to reach out to people typically that may have been in your backyard or you're very familiar with, to get a large group of people together that ultimately you can ask them kind of where they are in their lives. There's nothing but millennials out there who are looking for insurance. It's just, how do you go after them? And if you ever need those ideas, feel free to reach out to your regional rep here at Assurity, and we'll be happy to help you with that. And we have one question about long-term or short-term DI. This particular product, wouldn't be considered, a short-term DI product. It would be more, towards the long-term side of things on our DI rider. And again, more details if you want us to spell that out. That highlight sheet, I think, will really help spell out kind of how that rider works in detail. Do consumers need healthcare insurance in order to get StartSmart? Well, no, that would not be a requirement of this particular product. Now, at Assurity, we're always going to recommend that somebody has health coverage, right? Critical illness is not a replacement for that. But as we kind of demonstrated today, with high deductible healthcare being on the rise, that gap is greater than ever. And what was filling the gap in the market, people would have health savings accounts. Those things are really becoming health checking accounts for people. They're not able to build up that nest egg because more and more of those daily costs are being shared with them. So they don't have the funds in their bank or their HSA to pay for a bill if they would get cancer or a different situation in an early age. So you don't have to have health care, but Assurity, obviously as part of an insurance package, we would highly recommend that being a first step. And we can show it back on the screen here. If we go back one more, we had a question again. We might have went quick on that URL name. So again, feel free to try it out for yourself. Go out to assurity.com/StartSmart. On that particular page, you will see a link to the highlight sheet that I've mentioned. It's right on the home page of that site. So if you want those product details, you can just go there yourself, or you can check your email here in a bit and we'll send that out to you. We really appreciate all your questions today. At Assurity, we're always looking for solutions that can enter the market in a different way and just aren't a race to the bottom for term rates, because we know that that is definitely a big market out there, but that market doesn't always best serve the needs of the clients. So we're looking at different ways to partner with you to get that done for your clients. So with that, Jeff, thank you so much for being with me today.
Yes, sir.
It's been a pleasure to do this webinar. And if any other questions come up, feel free to reach out to your regional rep and we'll get back to you. Have a great day.